And coming right up, we have a presentation by Mastercard on the topic of the impact of COVID-19 on the global venture ecosystem. For this, we're pleased to have with us Ms. Amy Neale, Senior Vice President, Start Path and Fintech of Mastercard.
Hello, everyone. My name is Amy Neale, and I'm the Senior Vice President at Mastercard with responsibility for startup and fintech engagement. And today I'm delighted to talk to you a little bit about the impact of COVID on the global venture ecosystem. But before I dive in, a little bit more about me. I lead Mastercard's Start Path program for fintech and startup engagement. This is our global initiative for identifying the best and brightest fintechs and startups from right across the globe, bringing them through a 6-month engagement program with Mastercard and our key clients in all corners of the world. We work with our companies in a number of ways to support their growth, but also to co-innovate and find opportunities together. Over the last 6 years, we've worked with about 250 companies, and those companies have gone on to raise about $2.9 billion in capital. But back to today. So I'm going to talk to you about the impact of COVID-19 on the global venture ecosystem. And this picture sums it up for me. The start of the pandemic was a bit like being plunged into water, holding our breath to see what would happen, figuring out when we'd be able to come up for air. Some of the fintechs that I spoke with felt like that they were sinking, and others were simply finding new ways to swim. And back in March, there was a lot of discussion as to whether COVID was the black swan of 2020, a wholly unpredictable, rare, catastrophic event for which global systems and governments were unprepared. And there's been a lot of debate as to whether it was entirely unpredictable. But as it relates to global venture, I would suggest that the system was ready for this. Venture capitalists are really well known for making lots of investment, which brings them exposure to regular losses, but it also positions them to benefit from irregular massive gains, the things that happen far away from the center of the bell curve. And equally, individuals with entrepreneurial natural disposition, they respond to opportunity. And this year, we've seen entrepreneurs in organizations, large and small, public and private, do really remarkable things in response to the crisis. Who would have thought before 2020 that car manufacturers would be building medical equipment, that governments would be partnering with fintech to get money into people's hands, that there would be collaboration on a massive scale to find the vaccine? I know that in my own city, the cycle lanes that we've long campaigned for, they appeared overnight. And closer to home, one of the fintechs that we work with in Brazil pivoted their digital onboarding product, so a solution specifically to create better digital banking experiences. They pivoted that solution to telemedicine, to enabling not just consumers on board for a new banking product, but medical practitioners to onboard to be able to provide medical advice at distance. Incredible innovations that we've seen through the course of 2020. So when we think about entrepreneurs, we recognize that there are 3 traits in common with entrepreneurs, that they have 3 things in common. And there are 2 of those things that I want to focus on today. But the 3 things that they have in common are their ability to curate resources, so to be able to build brilliant teams, but also to be able to acquire capital, their ability to identify opportunity, to pivot in response to opportunity, and to solve for major needs. And then the third trait is their ability to lead in a way that creates value. So over the last 9 months, I've had the opportunity to hear many stories from startup founders on exactly how the crisis has impacted their businesses and the steps that they've taken in response. Some have had to take really tough decisions, closing their businesses, focusing on conserving cash, preserving the runway, and moving away from sales to pure customer retention. But others have found new ways. They found ways to pivot, to thrive, to grasp opportunity, and to really double down on ideas that they had pre-crisis in order to build and come out refreshed and renewed. So, what I thought I'd do today is take you through some thoughts on capital and then some thoughts on what the opportunities might look like on the other side. So, we worked with our friends at PitchBook to take a look at the year in review. So, we looked at venture capital worldwide over the past 10 months, so January through to October. And what we know was that 2019 was really a banner year for venture capital investment worldwide, both in terms of the number of deals and also deal value. And what we've seen this year is actually, unsurprisingly, the number of deals from the venture capital community has definitely fallen. There are fewer deals that have taken place month on month over the course of this year. Unsurprisingly, I would say, for all of us. But perhaps what's a little less surprising is that it hasn't dipped in quite the numbers that we might have expected venture capital deal numbers to dip over the course of this year. While we've seen consistent talk of an economic downturn over the course of the year, the number of deals has really remained fairly consistent. And then if we look beyond the number of deals, what we see is that while there was an initial dip in value of deals, actually over the term of those 10 months, the aggregate deal value has actually increased this year. So fund managers really rebounded at a much healthier than anticipated clip in terms of aggregate deal value. And September 2020 saw one of the largest single month tallies for venture capital invested on record. So there are some underlying drivers and macro forces that are at work in venture that have proven to be stronger than the impact of COVID and perhaps have even eclipsed responses that we've seen to prior financial crises. Venture capitalists, despite the fact that there has been huge business distancing and they haven't been able to meet founders in person, have managed to keep investing, which is really incredible given the environment that we have seen this year. What's also really interesting in the figures that PitchBook have pulled together for us is that corporate venture capital has remained strong this year. Dollar values grew. That demonstrate a continued appetite from corporates, a continuing trend that we've seen, corporates continuing to invest in venture and playing a big part in the venture capital ecosystem. So, despite an enormous tightening of belts, we're seeing that corporate innovation appetite has increased this year. And then the final data point that we worked on with our colleagues in PitchBook are that actually this year fintech grew alongside other sectors such as healthcare, education, gaming. Fintech investment has grown this year. So, as consumer habits have changed with branch banking and in store commerce all but disappearing, fintech is seen as the great hope. And we have seen an increase in venture capital dollars going in with some standout months this year as well. One of the things that is really interesting across all of these three data points, global venture capital dollars going in, the amount of corporate venture capital, and that subsegment of fintech, is that actually what's happening is angel and seed funding is really disappearing, but there is strength in Series A and then later stage venture capital right across these three trend points. So, having taken a look at the capital, knowing that there are opportunities for entrepreneurs with great ideas, what do we think about opportunity, that other really important trait of an entrepreneur? What is driving the changes that we're seeing out of this COVID landscape? Well, I think it's apparent to all of us that there has been an overnight shift to digital. We all know what is driving this. And I loved this when I first saw this on Twitter. In the first quarter of 2020, we saw a larger shift to digital payments in 10 weeks than in the preceding 5 years. And as a result of that, there are three key trends that we're spotting around fintech and the opportunities for fintech. So the first of those trends is around meeting consumers where they are. We hear a lot about embedded fintech and fintech appearing in consumer experiences. And there's a cluster of things that are happening that are enabling new fintech innovation around consumer. So the first is around the adoption of contactless and mobile wallets, which is something that we don't see going away. In Europe now, almost 80% of all in-store transactions are contactless. We also see that the crisis will have a long-term financial impact, especially for lower income consumers. Consumers will also continue to demand a full range of digital, easy and secure banking services. So that provides an expectation around the continuation of neobanks, challenger banks, digital first banks, but also those B2B fintechs that are helping the traditional banks to move their digital transformation forward. E-commerce will benefit from in the long term from new consumer segments and categories of spend, so that e-commerce enablement of fintech is still incredibly important. In May, the US e-commerce spending grew by 93% compared to the same previous May in 2019. So huge cluster of innovation opportunities around consumers. The second trend is around small and medium-sized businesses. They were the most hard hit through the crisis, but they will also be the engines for growth in the recovery. And we already saw in 2019 a trend for fintech around SMB. SMBs will continue to need both financial support, but also support to rethink their digital strategies. And then the final cluster is very much around how we think about financial services and sustainability. Consumers are more conscious than ever before they purchase, before they invest. They want informed and ethical choices. And over on the Start Path booth, we have examples of fintechs in all of those three categories: the consumer space and meeting customers where they are, the SMB space, and also the sustainability space that bring this to life. We're also seeing 5G come over the horizon to enable a whole host of new technical innovation: Internet of Things, augmented reality, new artificial intelligence use cases, the next generation of cloud, and they will all have the ability to enable new products, solutions, and platforms that we've only been able to dream of before. So while living through the pandemic and the resulting economic shocks, at the same time, we're at this incredible point in history where the opportunity that technology brings is being met with a fundamental global shift in how we live, how we work, how we survive. And some are calling this the fifth industrial revolution. So this landscape provides a Pandora's box for anybody obsessed with grasping opportunity and looking to trends that they can then build upon as entrepreneurs. So, from a Mastercard point of view, we are poised and ready to support fintechs and to help them accelerate the way that they are changing the world. We have a simple single front door for fintechs to achieve their goals, whatever those goals might be, as well as the program that I'm responsible for, the Start Path program that supports the brightest and best fintechs to scale. We also have Fintech Express, which enables fintechs to get issuing products and other payment solutions into the market really, really quickly. We have the ability to support technology providers who want to partner with us in supporting everybody to access fintech solutions. And we have a suite of APIs through our developers that enable developers to get their solutions built quickly. So thank you so much for your time and for listening to my views on the impact of COVID on the venture ecosystem globally. Please join me for a live Q&A session right now.
You can speak now.
So thank you everybody for joining, and I'm delighted to take any questions that you may have. So the first question is, can I talk a little bit more about how Mastercard works with startups and fintechs and how people can get involved? So Mastercard Start Path is our startup engagement program. We have been operating the program for 6 years now. We've worked with about 250 different companies over the past 6 years. And those companies have gone on to raise about $3 billion in capital. So we like to think that we're both good at spotting great companies, but also that through the program, we're helping those companies to grow and scale and achieve their ambitions. So companies can apply to us quite simply through the Start Path website. We take companies through an evaluation process. For those companies that are not a fit for Start Path, we will share them with colleagues across the organization. So for companies that are looking to do business with Mastercard, that's also a good front door for them as well. But then when those companies that we do invite in, when they participate in the program, we work with them in a dedicated way for 6 months. We create a bespoke program around each individual startup, which is focused on helping them to scale, grow, supporting them with education and expertise, introducing them to our customer base right across the globe, helping them think about new markets that they want to enter, and obviously looking for collaboration opportunities with Mastercard. We've developed a really strong mechanism for how we collaborate with startups as vendors, startups as people that we'll go to market together with. And we're very proud of the engagements that we've been able to produce through that program and the successes that we've been able to see for our startups. Outside of Start Path, we have a couple of other mechanisms through which we work with startups and fintech companies. We also have the Fintech Express program, which is specifically for paytech, so companies who are looking to issue cards. And we have regional arms of that program. And companies are very welcome to access the program through Mastercard Accelerate or by reaching out to me, and I will definitely direct people in the right direction. We also have a program called Engage, through which we partner with technology companies that can help startups and fintechs to get their payment solutions off the ground. And then we also have our developer APIs, which enable fintechs to access our technologies at speed. So yeah, those are some of the ways that we work with fintech companies. So the next question here is that I talked about fintechs that are supporting SMBs. Can I talk more about this? And are there any standout examples of companies championing this space? So SMB has been a massive topic in 2020. SMBs have been impacted the world over. And I think supporting them to recover has been a major priority for both fintechs, but also large organizations. We have actually been working with a number of fintechs who are supporting SMBs for quite some time now, actually well prior to the pandemic. So I can give you a couple of examples. I think that this for us stemmed out of the fact that we'd been watching where fintech investment was going, and we had seen that there were new fintechs emerging who'd recognized that on the back of some of the trends coming out of the challenger banks serving consumers, that there were massive opportunities to extend beyond the consumer and actually work with micro entrepreneurs, gig economy entrepreneurs, and then small and medium-sized businesses. So a nice example would be a UK-based fintech called Previse, who are supporting suppliers to get paid quickly. So suppliers to large organizations typically have long payment terms of 45 days or more. Previse has developed artificial intelligence tools to analyze supplier invoices, and where those invoices pass a threshold, those suppliers can get paid right away. And I think, some of those innovations in fintech, not just about banking small and medium-sized businesses, but supporting them to get capital, to get paid, and to evolve their businesses to become more digital, have been really, really important. Great questions. So a question here about the fact that I spoke about corporate venture capital in the presentation, and how are corporates like Mastercard getting involved in fintech venture capital. Yeah, so I mean, I think over the past couple of years, corporates have increasingly been involved in fintech venture capital rounds. Fintechs are corporate institutions are looking at how they innovate through partnership. Equity investments into fintechs is one way to do that. Is one way to build strategic relationships with emerging players. And I think that what we've recognized over the past couple of years is that partnership is increasingly really important for emerging companies who look to larger companies to achieve scale and to rely on their brand and their position with regulators and their tried and tested compliance structures. And then on the other hand, the fintechs are working with corporates to provide corporates with the ability to get to market faster with new opportunities and to transform their digitalization efforts much more quickly. So lots of win-win between the corporate and fintech space, and I think that that is why we're seeing that increase in equity investments going in. So I think there's time for maybe one last question. Do we work with just pure fintechs? I assume this is a question around the StartPath program. And the answer to that is actually no. Through StartPath, we've worked with startup companies in fintech, but well beyond fintech as well. We've worked with artificial intelligence companies that are thinking about evolving their solutions to make them ready for the financial services space. We have worked with blockchain companies that are bringing brand new propositions to market. We have worked with data companies. We've worked the whole spectrum of different companies, cybersecurity companies as well. So the door is really open in whatever way you're innovating in financial services today. We're really excited to talk to you, excited to engage. I think that that is my time. So thank you very much for compelling questions and for your interest and time and attention today.